Hello. Today, in this video, let's discuss about the bullish and the bearish candlestick pattern in the chart. There are 6 powerful patterns in the bullish and 5 in the bearish. First, let's learn the bullish patterns one by one. Number 1. The hammer pattern. This is a candle with a short body and a long lower wick. It is usually located at the bottom of a downward trend. If the body is green, it indicates a stronger bull market. Number 2. The inverted hammer. This is a candle with a short body and a long upper wick. It is usually located at the bottom of a downward trend. It indicates buying pressure followed by selling pressure. Number 3. The bullish engulfing pattern. This is a pattern of 2 candlesticks where the first candle is a short red one engulfed by a large green candle. It indicates a bullish market that pushes the price up despite opening lower than the previous candle. Number 4. The piercing line. This is also a 2-candle pattern having a long red candle followed by a long green candle. Here, the closing price of the second candle must be more than half the body of the first candle. This indicates strong buying pressure. Number 5. The morning star pattern. This is a 3-candle pattern. The first candle shows the continuation of the downtrend. The second candle, being a doji, indicates indecision in the market. The third bullish candle shows that the bulls are back in the market and reversal will take place. Number 6. The 3 white soldiers pattern. This is a 3-candle pattern that has 3 green candles with small wicks. These candles open and close higher than the previous candle. After a downtrend, this is a strong indication of an upcoming bullish trend. Now, let's learn the bearish candlestick patterns one by one. Number 1. The hanging man. This is a candle with a short body and a long lower wick to describe in a simple way the hammer candle at the uptrend. It is usually located at the top of an upward trend. It indicates that the selling pressures were stronger than the buying thrust. It also indicates that bears are gaining control of the market. Number 2. The shooting star. This is a candle with a short body and a long upper wick. It is usually located at the top of an upward trend too. Usually, the market opens higher than the previous day and rallies a bit before crashing like a shooting star. It indicates selling pressure taking over the market. Number 3. Bearish engulfing pattern. This is a pattern of 2 candlesticks where the first candle is a short green one engulfed by a large red candle. It usually occurs at the top of an upward trend. It indicates a slowdown in the rising market and an upcoming downtrend. Number 4. The evening star. This is a 3-candle pattern that has 1 candle with a short body between 1 long red and a long green candle. This is an indication of the reversal of an upward trend. This is more significant if the third candle is larger than the gains of the first candle. Number 5. The 3 black crows. This is a 3-candle pattern that has 3 consecutive red candles with short wicks. These candles open and close lower than the previous candle. After an upward trend, this is a strong indication of an upcoming bear market.